And Beyond Meat is not the first stock to skyrocket to levels that make analysts and investors uncomfortable, and it won't be the last either. More recent high-profile examples include Netflix and Tesla. But what is an investor to do if you are tempted to buy a stock that has risen 600%? Or what do you do if you already own it? Joining us now is David Sowerby, portfolio manager at Ancora Advisors. Welcome, David. Nice to have you here.
My pleasure.
I mean, Beyond Meat is the story really of the last couple of months. Do you view it as what they call a bubble stock? And how would you assess stocks that have gone too far too fast?
Well, first, I don't own it because I can't own stocks that have a price to sales of almost 90 times sales, negative cash flow, negative profit margins. And I don't think that there's enough barriers to entry that make that kind of valuation that's priced for sainthood, frankly, something you want to be long in your portfolio. And it all comes back to when stocks have excessive valuations, fundamentals don't allow you to analyze and put a true value on the stock. When there's what we'll call FOMO, which is fear of missing out, supersedes the desire to own a stock, all those lead me to the conclusion that whether it's Beyond Meat or a Tesla or a Bitcoin in January of 2018, those are all bubbles.
Well, what do you do, though, David? I mean, there is a definite interest in plant-based foods right now, you know, fake meat, if you will.
Sure.
A lot of fast food chains are starting to offer it. The health issues that people face. Right now, Beyond Meat is the pure play in that category, but it's too expensive for a lot of analysts out there. What do you do if you want to invest in what you see as a growing trend right now?
Bill, I think in investing in general, investing 101 is always about discipline and patience. And in this case, it's even more so, which is simply wait a little while for the market to allow more competition to enter, and then find a company that has a better valuation and fundamentals that I think are better to analyze, and patience becomes the virtue. If you can't be patient, then really have the right size of this, which is small in your portfolio, and don't be that person that leveraged their whole portfolio to own Bitcoin in January 2018 or Beyond Meat even after a great run off the IPO in June of 2019.
Are there areas of the market, sectors, if you will, where you see too much enthusiasm, valuations that are out of line?
Well, Sue, I think that the FANG stocks still trade for the four FANG stocks, A being Alphabet. The average PE collectively is about 65 times trailing earnings. That's still pretty expensive to me when the average stock in the S&P is trading at 17, 18 times earnings, and many even less expensive than that. I think too many of those names are still expensive today. They're priced for perfection, priced for sainthood, and those are names like it. Even on the debt side, quickly, the WeWorks, the Teslas, to own the company debt. I think there's bubbles there too.
All right.
Overall, there's not many bubbles in the market, but there's sure some in these pockets of the market.
David Sowerby with Ancora Advisors, thank you so much for joining us tonight.
My pleasure.